Let's get into the international stock that we're going to talk about today, and that is, of course, BlackRock, which is the world's largest investment management firm.
That's right. It's got about $5 trillion under management, and that is made up of equity portfolios as well as lots of bonds. They even do work for the US government, managing a few of their portfolios as well.
Market cap $69.3 billion, a PE of 20.5, and a dividend yield here of 2.3%. So this is the big boy on the block. Look at the share price graph, given the underlying performance in the US environment right now.
Now that's a record high. Nick, do you want to talk about this company?
I'd love to. Yeah, BlackRock, it's massive, guys. I mean, 5 trillion. It's actually almost close to 5.7 now, well on their way to 6 trillion. That is huge.
It's almost the GDP of a small economy.
It actually is, seriously. So it's quite amazing how much money these guys actually manage. And what's very interesting is being an offshore asset manager, it's a little bit different from the local perspective in the sense that offshore asset management, about the last 20 years, has gone into mainly passive managed investments. You know, ETFs, exchange traded funds, are a really big deal offshore. They're starting to gain traction in South Africa, but still a very, very small part of the asset management space. And where BlackRock is a little bit more diverse is that they have a huge chunk of this passive assets under management as well as active assets under management. So if there ever is, you know, one year a little bit of a favoritism over the other, they are really, really well balanced. But there's a general trend from a fiduciary rule perspective to really, really concentrate on how much you charge your clients. It's called the interest of investors, essentially, from an American perspective. And this is really clamping down with like capping on your percentage cost that you would charge on assets under management. And having a company like BlackRock that has a huge exposure to iShares, it's called, which is the ETF business, where the cost is 0.4% to run your ETF, is incredibly attractive. And you're seeing a lot of funds go into that. So not just from a private investor perspective, but also from a retirement perspective investment as well. You know, they're not going for these, you know, actively managed funds anymore. They're going through more of a passive role. And that seems to be a drive offshore. And BlackRock's been doing that for the last 20 years. So very, very interesting business, actually.
And you bring us to an important discussion point. It's something that we always bring up at this point in the discussion of asset management, and that is active versus passive. Again, you've seen the metrics out there that the ETFs are outperforming.
Exactly, and the S&P 500, which is the big one for index to follow, has done so well. Very few asset managers have managed to attain that. But look, so BlackRock gets a bit of margin erosion as customers want the iShares option. But remember, the assets are growing. So just by value of the market going up, it sort of stabilizes. And that's why I think the shares have done well. It's got a great position in the global markets, headquartered in Manhattan. Larry Fink is the guy. You've seen him on CNBC Africa often. Very established, you know, respected figure in the industry. So I think they're going to continue to attract more assets. There's going to be a scale benefit, and they're going global, you know, more and more. They'll be in different offices around the world.
So is there no stopping this one? Are we hot?
Well, their main rival is Vanguard. So, I mean, it's only really two. It's an oligopoly. I wouldn't say there's no stopping it. It's a difficult industry, but it looks like it's just moving ahead every little bit by every little bit. So I would be not hot on this one.
You're not hot on this. How did he tee that up? I mean, it looked as though he was going to say hot, and then he went for a not
hot. Not at this price. I just don't feel comfortable.
If the global markets subside and there's a negative turn and then the margin pressures come, you could foresee a scenario like that. But
are you hot?
I'm going to stay hot. I just think the global markets are doing just fine, and there's more upside, and accordingly, businesses like BlackRock will continue to thrive.
And just again, noting that our US portfolio is at an all-time high, hence your buoyancy when it comes to international markets.